I do measurement of liquidity within Bitcoin, and that's dropping. It's dropping right now. It's been dropping for months.
Bitcoin's liquidity is dropping, and that's a problem.
And that divergence is growing bigger and bigger. And at a certain point, the clock stops ticking.
In fact, despite fundamentally Bitcoin and crypto, the market is getting stronger. It's getting better. We've already had the leverage flush out. We have a new Fed chair incoming. The SEC and the CFTC are backing this asset class like crazy. And the market structure bill is coming. So, fundamentally, we're in a very good place. But then, why are we dropping? Why is liquidity being sucked out of this asset class? Expert trader Willy, who I really respect, said this about Bitcoin's liquidity being sucked up. What he's seeing...
I do measurement of liquidity within Bitcoin, and that's dropping. It's dropping right now. It's been dropping for months.
What is that a function of then? Why is it dropping? Like, is something else pulling liquidity out? Or is it just the demand has just been running strong for a while and it's just tapering?
I just do really dumb shit, which is measure the flow of capital coming in. I don't look at why. I don't speculate why. I can, but I'd probably be wrong. It's not coming in at the same rate. So it tells me that we're in this phase where liquidity is starting to reduce relative to the growth of the price, and that divergence is growing bigger and bigger. And at a certain point, the clock stops ticking, unless there's a massive injection of liquidity some point, right?
In the broader economy.
No, in the Bitcoin network, right?
Okay.
But I've never seen that. You know, we measure it, it peaks and then it starts tailing. You might get a little bit of this choppiness, and those choppiness adds to another bullish run, but the clock's ticking. And so, yeah, we're late phase in the bull market.
I was just about to ask, we'll finish this topic. You'd definitely say this is late stage of the bull market in the final... It's the final leg of the bull market.
Yeah, and that's when things get interesting. Like,
but to be clear, that final leg...
could be huge.
Could be 3 to 9 months.
It could be 3 to 9 months. Yeah, I think that's a good sort of window. And also, if you look at some of the past cycles when the liquidity started sort of dropping away, that's when the fireworks happened. That's when Bitcoin ran up from, rough say, 2.5 to 5,000 to $20,000. Right? That's a blow off top.
And let me show you this. That is what Willy just said is backed up in the data. We see the ETF inflows in USD over the last 90 days. Gold's ETF inflow. So this is not price, this is inflows. Gold's inflows are going up. Obviously, the price is going up to match, and people are risking out of Bitcoin, and the ETF flows, they're not negative, but they're not going up at the rate that they once were. So I think it is worth talking about worst-case scenario. If the worst should happen, what does that mean for Bitcoin? And this is troubling. Almost 9% of the S&P 500 stocks were at 52-week lows yesterday, while the S&P index was within 1% of an all-time high. What this means is almost 10% of the S&P 500 is doing horribly. They're at year lows, but the S&P is 1% off of all-time high. That means a few assets, and we know this, NVIDIA, others, AI, a few assets are holding up the S&P 500. This has only happened 3 times before. Twice in December of 1999 before the March 2000 tops, so 3 months before the big top of the internet. And then July of 2015 before the August 2015 crash. And one chart does not validate the trend, but when we start to see more and more charts sort of add up to this, that's going to affect things. And again, that's showing the weakness in the traditional market. We understand fundamentals, I just said this. Fundamentals in crypto, bullish fundamentals, are getting better. The traditional market, macro uncertainty is pulling us down. That's about a month old. Willy has updated his opinion. And if the worst should happen, expert trader Willy Woo says Bitcoin could drop to $16,000, 16K, and the worst-case scenario crash. Let me share with you this clip, and then I want to give you my take.
Well, I just see Bitcoin as going into a normal standard bear market. Like, everyone thinks it's strong, and it is. And the investors are strong, like institutional, MicroStrategy, these types of companies are holding it. So there's strength there. But if we get a pop in the global asset bubble, then that impact will pull it down, and that maybe we get a 80% drawdown like last time, and it's like just another 4-year cycle from the view of being inside Bitcoin. But from the view outside, it's a totally different thing. Look, it just did its normal thing against a stress test. So
80% from these levels would be catastrophic on the charts, though, right? It would look like the entire 16-year chart is breaking down. It would, because we're talking about going back down to 80% from here would be about $35,000.
If it holds above 16,000, the bottom of the next bear market is structurally intact because it's higher than the last bear market. And we shouldn't look at tops either. Tops are very unstable. The bottoms are very much closer to the fundamental investors. Generally, it doesn't drop below 20% of the capital stored in the network. It's very close. The tops are sometimes 3 to 5 times more than the capital in the network. So at the bottoms and how that performs, if it drops below 16,000, then that'd be a little bit freaky, you know. But that can happen. It can rebound.
So my take comes down to this. I am not sold. I'm still bullish. I explained the bull case. The fundamentals you want to invest when there's a divergence of price is going down. This video has ended. I would appreciate it if you watched my previous videos. Don't forget to subscribe and like. And please tell us what you think about this video in the comments. Until the next video, goodbye.